What's up everyone? My name is Eric. Welcome to my channel, Redwood North Trading. Today is the 3rd of December 2020 and today's trade alert is in Etsy. I opened a strangle. I sold the 220 and 115 strangle for $1.84. I bought 2 contracts, which is why 2 of these show up here, and they got filled at different times, so that's why it's a little funky. Let's check out the trade tab details. The 30 to 60 day window, we are basically right in the middle here at 43. And if you want to go for the short strangle, you can take the easy route up here and click on go. Come down here to the width and spread it out. You end up here at 120 and 190, but amazingly you're at the 8 delta here and the 18 here, and you're collecting $420 or $4.20, which is $420. You're sitting at 80% pop on that one, which is awfully tempting. However, I'm sticking to my guidelines of collecting around $2, so I went pretty conservative here. As you can see, I spread this way out here to the 7 delta, and then this one up here to the 6 delta, and I'm still collecting about $1.80, which is pretty incredible, frankly. This is a massively wide spread at 115 and 220, a $105 spread with a 90% pop, 92% P50, collecting about $1.80. Max loss is undefined or unlimited, however you want to say it. And then the buying power effect is definitely in the medium range or high, depending on your account size, at about $1,550. Etsy's IV rank is up here at 22.5, which right now that's in the middle to high range. As you can see on the side here, you know, this highest one is at 41 and then 34 and 34 again, but then everything else is, you know, 26 and under. So 22 and a half is pretty high up there, all things considered. I almost sold just a single put here around the 11 delta here and the 125 strike. However, I was looking back at my trades, and I think 7 out of my last 8 trades were either naked puts or naked calls. Those are all directional trades technically, right? You either want it to go up or down or sideways. So here with Etsy, I decided to go with the neutral strangle just to kind of diversify my positions, right? I mean, there's nothing really wrong with going with a put here or even a call if you felt like it. Again, all personal preference. Whatever you feel comfortable with and you like the percentages and the deltas, just go for it. Alright, so a strangle is obviously an undefined risk trade. If you want to define your risk because you're not comfortable with the unknown risk, or if you have a smaller account and you want to lower your buying power, you simply need to turn this strangle into an iron condor. So the quickest way to do that is to go up here to these easy buttons here in Tastyworks, click the arrow. You want to do a short iron condor and hit go. Just like with the vertical spreads I was talking about the last few days, with the iron condors I like to go 5 points wide. On this ticker you don't really have a choice, it's either 5 or 10 or 15 points wide. And then remember, I like to collect $1 here. So the default setting here is obviously way too aggressive. Come over here to the width tool, spread it out a couple times, keep going. And there you go. Looks like you kind of have 2 choices here. This setup gets just under $1, somewhere around 95 cents, give or take. Or you could go slightly more aggressive. This one's at the 8 delta. This is at the 19. So I would move this one just a little bit closer to the next strikes up, keeping that 5 points wide. This is 5 points wide. And there you go. You're collecting $1.10. That leaves you with a 72% pop. 81% P50. If we lock this in here at $1.10, that locks your max loss at $3.90, and that also locks in at your buying power effect at only $3.90. It's nice to see that Tastyworks is working properly today. The last few videos, these numbers would not update for some reason. So there you go. That's the defined risk iron condor that you would need to change the strangle into. Your pop goes down by about 20%, 18 to 20%. But again, look at how much closer your strikes are, you know, which is fine. That's just how iron condors work and vertical spreads work, right? Most of the time you're going to take a slightly more aggressive position. However, you get to lock in your max loss and your buying power, right? So there's pros and cons to each one. Iron condors usually work a little slower to get your profit versus the strangles. The strangles will give you a higher pop, but then they are an undefined risk trade and they take more buying power. So depending on your buying power and your level of risk, you have to weigh your options, no pun intended, and pick the strikes and the strategy that you are comfortable with. Either way, with the strangle or the iron condor, I look to take profits around 50% of my max profit. So this 110 would be 55 cents, which would give you $55 profit per contract, before fees, obviously. Remember, for Tastyworks, every time you open a trade, it costs $1 per leg. So with this iron condor, there are 4 legs in the trade. You have the 120, 125, 190, and 195 strikes. So it'd be $4, plus there's a couple cents in government fees. So you got to factor that into your overall earnings technically. However, the nice thing with Tastyworks is they don't charge you a closing fee. So you just pay the $1 and that's it. I think I mentioned in my video yesterday that I also go ahead and put in a closing order right at the same time that I open the order. So once this order is opened, you just go up to your position tab up here. You highlight all the legs of the trades, right click on it, say close position, and then I pick 55%, and then I submit that as a preemptive closing price for my trade. When I do this, I know I'm putting in the closing trade way ahead of time. Like even this strangle could be 3 weeks, right? The iron condor could be 4 weeks or longer for either one, right? So I know I'm putting in this closing order way ahead of time, but it just streamlines the process. You don't have to think about it. If you just do everything at once, it's kind of a set it and forget it scenario, right? And then also if you get a quick mover, you know, in a week from now, if for some reason this thing spikes up and hits my 55%, I get lucky and I take that extra 5% and I move on to the next trade. Most of the time though, I just happen to see that it's, 45 or 50% of my max profit, and then I'll go in there, I'll edit the previous order and then submit it manually and then get it closed. And then one more quick note here, I just want to show you how wide this spread is on a chart. So here we are in the trading view chart. Open the trade here just today. When I opened the price, the underlying stock price was 155.50 cents. You can see here is my 115 put strike, and then my 220 call strike is literally off the chart. Look how big this is. I have to turn off the auto zoom and pan down. And there you go. It's way up here and way down here. Off the top of my head, I'm pretty sure this is the widest strangle I've ever gotten myself into. And then especially considering that these strikes are at the 7 and 6 deltas, and I'm still able to collect, $180, $190, upwards of $2. I keep saying $2 or $200 or $180 and $1.80. It's all interchangeable in my mind because you control 100 shares of stock per option. Anyway, sorry for going back and forth there. Pretty sure you get the gist of what I'm trying to lay down. And that reminds me that I forgot to mention the spread on the strangle was only about 10 cents wide on a $155 ticker. So that's awesome. Only 10 cents on a $155 stock. So that's super liquid. I was able to get filled right about the mid price, which puts me in a position of 90% pop. All right, I think that's a wrap on everything. Let me know if you have any questions. I will update the trade if I have to roll it or when I close it or anything else happens, and I'll see you in the next video.